Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video. And it's that time of the week again, guys, where we go over the top 5 options plays for the upcoming week. Keep in mind, guys, all of these options plays are going to be specific to the put wheel strategy, meaning we are writing puts at designated strike prices and trying to generate as much premium as possible. The reason why we call it the put wheel is because we are going to be writing these puts at the designated strike prices. And if we do get assigned, we are then going to wheel out of that position by writing covered calls against the position. So if ever you were assigned any positions over the course of the last week, well, this week is the perfect time to write covered calls on that position to generate even more premium. The put wheel strategy, guys, is one of my favorite strategies to run. It's very, very easy to understand whether you're a beginner, intermediate, or even advanced investor in these markets. And it is a very high probability win strategy. Most of my trades are 90% plus win rate trades. All in all, very great strategy to run, very low stress environment as well when running that strategy. Think of it just as placing buy limit orders that pay you. Selling puts is really just that. You're basically placing buy limit orders on companies that you like, and if ever the limit is not filled, you just collect the premium. Usually when you put a buy limit order for 100 shares on any given stock, well, the order just sits there and doesn't really do anything, does it? But when you do it with puts, at least you collect the premium if ever your buy limit order is not hit. So it's a great way to farm some premium, guys. And with that said, pretty much, in today's video, we're going to go over a few of the strategy rules specific to running the put wheel strategy that I use that makes for better trades. Then we're going to go over the top 5 plays of last week, see how those did. And then we're going to conclude with this top 5 plays of this week. That was tough to say, my bad. So without further ado, guys, let's get into it. So what is the context of this week? Well, obviously over the weekend, we had some heightened geopolitical events happening, right? We had Iran launching missiles towards Israel, and we are now waiting for Israel's response. Largely, Israel has been able to avoid any major damage from the missile strike, but tensions are still high, guys, and that will be front and center on people's minds this week as that continues to evolve. Also front and center remains the concerns for heightened inflation and the potential projection of interest rate cuts only coming later on in the year. That has all led to a high degree of market uncertainty over the last week, which is plunging the SPY down into our last area of big bull support. The bulls are still in control of this market on the daily, and the bulls are still in control of this market so far on the weekly, and a large contributor to that support has been your QQQ bulls. They are in full control, even though financials and healthcare have taken a little bit of a bath over the past 2 weeks. Your tech stocks still do remain strong. So in terms of the trades for the week, guys, we need to focus. The theme of this week will be high conviction trades. Let me repeat that again. High conviction trades. What we need to be doing in this market environment where we are uncertain whether or not we're going to get the weekly rollover into extended sell-off or whether or not the bulls are going to be able to hold this area. That is anybody's guess. Are the red flags present to warrant a potential weekly sell-off? Absolutely. Will it happen? That's anybody's guess, guys. The bulls are not going to roll over without a fight, that is for sure. So we remain cautiously optimistic on the market. However, our trade patterns must shift now to very high conviction trades. So by all means, if I show my top 5 options plays for this upcoming week, and there's a company in there that looks technically good, meaning in terms of price action, but it is not a high conviction company for you, by all means, do not trade it. You need to be setting up lists currently, guys. When we're in the face of a potential weekly drawdown in these markets that can last for a few weeks, up to a month, maybe even 2 months, at worst case scenario, we're not there yet, but in the event, right? We need to be preparing lists, and the high conviction lists, I call them, right? A plus setups, then we're going to have our B setups, then we're going to have our C setups, right? In terms of stocks we want to own. This market, we need to be going for the A plus setups, and there should only be a handful of companies in that A plus setup list for you. An example of my companies in that list are most of your big tech names, the Fab 4, the Fab 5, right? Apple, Google, Amazon, Microsoft, Netflix, Nvidia, and then we can go on to other plays from other sectors that are also extremely high conviction for me. Think of credit cards, MasterCard, Visa, American Express, right? And the list goes on, but it's a relatively small list. These high conviction plays are obviously different to each and every person. That's why it's important for us to derive these in the event that the markets do sell off, we are ready with our shopping list and we're going for the most high conviction plays. Some of your high conviction plays, guys, should be respecting the current market narrative that we're in right now. These are the best themes to be playing over the course of 2024, especially when fear starts getting hot as it has been. We need to stick to the themes that have been working so far this year, the themes that Wall Street are unilaterally behind, guys, meaning they will support those trades. Those trades are most of your AI plays, so think semiconductor, big tech such as Apple, Google, Amazon, Microsoft, profitable tech companies as well. Think of companies like CRM, Autodesk as well, right? Experiences, travel, casinos, and hotels, healthcare, and financials, despite their recent sell-offs, are also decent plays for 2024, but only the highest quality companies amidst those sectors. All right, the ones that are tough to trade and will be tough to trade until interest rates come down are anything exposed to interest rate sensitivity. Think of EVs, think of solar, unprofitable tech, small cap tech falls in that category as well. Consumer discretionary, that's been a relatively tough trade this season too. Think of companies like Starbucks, Nike that just continue grinding lower, right? Because they don't have the overall support of Wall Street. When as soon as the camp is divided, you can see the common themes of this trade right here is that everybody is bullish on them, institutional and retail alike. When we come down to this sector, you start to get a bifurcation of people in the market. Some people are bullish, some people are bearish. There's too much uncertainty, so let's just stick to the high probability trades. I'm not saying that these are bad trades. It's just that if you do take them, don't be surprised if they just chill out and do absolutely nothing for a while until it comes time for their narrative. These are still good long-term investments, but in terms of the swing trades and in terms of the put wheel strategy, we want to be focusing on companies that if ever we get assigned, we have a high probability of being able to get out of those positions relatively quickly and with very little drawdown as well. So with that out of the way, guys, let's go over some of our rules, and we're going to go over these quickly. If you haven't seen my 30-minute video where I break down this strategy in detail, how I find my plays, how I manage my positions on those plays, I'll link it down in the description of the video and I'll put it top right corner. So I'm going to go over these more quickly than usual. Usually I spend about 5-6 minutes on these, but I want to shorten down the videos and focus more on the trades. So these rules are extremely important. The most important rule of them all is it has to be a solid company for you. High conviction trades, guys. All right. I'll give you an example of this, right? I've been running 200 shares of Apple in the mid 170s for about a month and a half at this point, right? Am I nervous? Absolutely not. That's about a $35,000 position, right? Fairly large position. I'm not saying it's the biggest position in the world, but fairly large position. Do I bat an eye the fact that Apple has been just struggling down here at the lower levels for the past 4 or 5 weeks, even being assigned higher? No, it's Apple. It's a high conviction trade for me. I know why I'm in the trade. I know that despite all of the recent negativity in Apple, can I find it? I guess I must have erased it. I know despite all these temporary issues, I know that they're only temporary issues. My long-term pros outweigh the short-term cons. It's a high conviction trade for me, so I don't mind playing Apple in these lower levels. I cannot say the same for a company like Peloton, let's say. I have a $35,000 position in Apple. I don't even care, to be honest with you guys. But even owning 100 shares of Peloton, right? Or even 1,000 shares of Peloton, $1,000 position, $3,000 position, that would make me more nervous than my position in Apple. It's all about the degree of conviction. And we need to maintain high conviction trades, guys, amongst times of uncertainty. It's not the time to be gambling on different recovery stories for various companies. So that is rule number 1. Very, very, very important. Now, let's go over the rest of the rules. Need to have a monthly uptrend or a long-term range. All these rules improve our probabilities of not being assigned the stock when we're writing the puts. So focus on companies in monthly uptrends or at least long-term ranges. Long-term ranges can look something like Autodesk as well, right? Long-term lower range, you would be targeting the lower end of this range to be writing short puts. So you'll see that all of my plays that I'm going to give today, guys, are at very solid areas of support. No earnings this week. This is absolutely crucial, guys. Just avoid volatility altogether. It is not worth it if you're not an experienced trader with the strategy or with options as a whole. Just don't do any stocks that have earnings this week, guys. It can go either way. You guys know a company can report beautiful earnings like JP Morgan did just last week. They reported outstanding earnings, and yet still the stock is down 6.5%. So just do not take the risk. Don't play stocks that have any earnings this week. Number 4, it needs to be in a support area or an area of breakout retest. We already run over that. So support area would be this lower end on Autodesk. The breakout retest would be a trade like this, where we're breaking out to the top end of the range, retesting the top end of the range as support in the form of a weekly breakout pattern. The retest area right here is going to be a very high probability trade, guys, usually a very successful trade. So that is just a technical level that we can watch out for. We want to be writing puts. These two next points come in line one with another. Want to be writing these on red or flat days, especially in an environment, guys, where volatility has been on the increase over the past 2 weeks. The VIX has been up. Well, now we definitely want to be writing on red days. If you're looking at a stock like AMD on a Monday, and AMD's already down on a Monday, 3-4%, well, we're going to be trying to write 4 or 5% below that, right? Which means that the total swing for AMD, that move, for you to get assigned would have to be like 8, 9, 10%. That is a good cushion. That's why we write on red days, and that's why we choose to write strikes at or lower than the expected move. If you don't know what the expected move of a stock is in a given week, that is just Wall Street's probabilities for where a stock can go. If you don't know what it is and you don't have the tools to see what it is, go on optionsai.com. They have a free tool. It's a free expected move calculator here, and you can see I have Autodesk pulled up, and you can see the expected move to the upside and to the downside. We will want to be writing puts below the lower end of this expected move to increase the probabilities of not being assigned. And before last here, we want to be writing premium between 0.5% and 1% per week, which means if you are writing a strike price of $100 on a stock, you want to be finding between $50 and $100 on the bid. So in terms of the options contracts, if we go for Autodesk right here, right, 0.5% of 225, just divide this number by 2 in your head, should be about 112, let's say. You should see $1.12 on this bid for the 0.5% rule. And for the full 1% rule, which is a little bit greedy in my opinion, I always stay to about 0.5%. 1% rule would be like what you see right here. The 230s are offering more than $2.30, which would be 1% of 230. That is how you derive that rule. The reason I keep it between this, guys, is the art form of options. This has been the area that, after perfecting this strategy in the last 4 years, has provided me the best ROI for the least amount of risk. If you go below 0.5%, guys, you just don't make enough money for the exposure that you're putting up for the trade. If you're going over 1%, guys, you just get too close to the current share price, right? You can, Autodesk for all intents and purposes is trading at 237, right? You may see the 235s right here and say, wow, I can get $418 this week for this one. Don't do it. It's too close to the current price. The market makers are baiting you into the trade, and this is a high risk of being assigned. Being assigned is not a bad thing, but you want to be assigned at the lowest level possible, guys, as close as possible to an area of support. So please do not get greedy writing premium too close to a current stock price, especially when there's 4 or 5 days left of trading in the week. You may end up with some nasty surprises. And lastly, guys, we're going to set a take profit order at 90% of the contract value. So if you write some premium here, let's say you write the Autodesk's, the 225s for $1.30, well, you set a take profit buy limit order back on those short puts for about 13 cents. That would be pretty much 90% of the value of the contract has been taken out, and you just get out of the trade. Since this strategy is so stress-free and you don't have to be in front of your charts 8 hours every single day, we want to just put a take profit order. If the contract value comes out and you're not at your screen, at least you are out of the trade, and it is pretty much a win in your pocket. So hope all of that makes sense. Now, without further ado, guys, let's get right into last week's trades. So last week's trades, we were starting off with Apple. So Apple, what were you looking for last week, guys? We were looking for Apple since Apple ended on 2 Fridays ago at this point, right? We were ending at about 169.85. We were looking last week, I'll remind you, for 167.50 or 165s. Those two strikes were the ones that we wanted to do. Now, I'm happy to say, guys, that on Monday, Apple did open down in the 168.21. It did open up the 165 contract for roughly 0.5%. So congratulations to all of you traders who were able to get the 165s. If you're a bit more aggressive with it, as I was saying, I would not have minded playing the 167.50s because they're very close to our last area of support, and Apple seemed to be bottoming out in this process, right? The bulls were saying, no, you guys are not going to flush us. They did a very good job of supporting this trade. So whether you wrote the 167.5s or even the 165s last week, you would have been rewarded very heftily, as Apple obviously closed well above that. So you would have just collected the premium in your pocket, and that was just a very beautiful trade. Now, trade number 2 that we were looking at last week. Now, this is when things get a little bit more interesting, guys. The second trade of the week was AMD. So AMD, we were looking for anything below. We were looking for 162.5 or better. So 162, 160, or even lower to really get the most out of this big area of support. And I'm happy to say, guys, that on the Monday session, when AMD opened at about 168.13, we did have a few strikes available to us. We had the 162.50s, and we also had the 160s that were available to us. And if we would have taken any one of those two trades, the trade would have ended up in a profit, since we did close above both of those strike prices by Friday. This is obviously one that I did take myself. Oops, let me log back in. Sorry about that. So as I was saying, guys, you could have got the AMD 165s or even the 160s were available for roughly 80 cents, roughly slightly before I took this trade. So I took the 162.5s. I got about 90 cents for them, which is over our 0.5% rule. Very happy with that trade. I took it in the afternoon on Monday, but if you would have taken it in the morning when AMD was a bit more red, you could have even gotten the 160 strike. And that was a very good trade. AMD obviously maintained above that level. So very nice trade indeed. The next trade, however, did not play out as well as expected. So this one was Intel. And what we were looking for on Intel, guys, we were looking for Intel roughly around the $37 range or better. I was talking about 37, 36.50, and 36. Well, unfortunately, all of those strikes would have been assigned, as Intel on the Monday did open red, provided us an opportunity to get lower into this area of support. I'll show you it on a bigger screen here. You can see that roughly 37 all the way down to about $34 is a very big area of congestion for Intel stock. And it doesn't really stem only of this period here. You can go all the way back in 2016, guys. This has just been a very hot area of congestion for the stock. That's why we wanted to play it. That being said, anybody who would have played this, such as myself, right? You can see here, I wrote the Intel 37s as planned on the Monday, and I got about 23 cents for them. So it was above our 0.5% rule. However, now we got assigned. So now we have to look to write covered calls over the course of this week. So let's take a look at some of the covered call options that we have on Intel, depending whether you got assigned with me, 37, 36.50, or even 36s. And you'll see that for this week, guys, the premium on the calls is fairly juicy, even for me, guys. Right? Look at these covered calls. They're currently paying about 22, 23 cents, which is above our 0.5% rule. For covered calls, we always usually go for the same rule as the puts. 0.5% to 1% rule is great, guys, right? So most likely you would have been assigned and you got some premium also. You see, I got 23 cents. So if I got assigned at 37 with a 23-cent credit, it means that my break even, guys, is about 36.77. If I write covered calls this week as well, let's say I write those covered calls for about, 22, 23 cents. If I can get them, obviously, if Intel has a little bit of a bounce tomorrow, the covered calls are going to be even more juicy. What you want to do for covered calls is write at the strike you were assigned. So if you got assigned at 37, don't get greedy and start writing the 38s or the 39s. You want to secure your strike first. So that's what we're going to do, guys. You're going to, whatever strike you got assigned at, 37, 36, 36.50, go for the covered calls that are within that region right there. And if you got assigned $36, those are actually perfect, as the premium is very, very juicy, well over 1% right now. So any bounce, we're going to be able to write some covered calls. The goal is to write covered calls until we can get called away from the stock above our price at which we were assigned. And the whole time the stock just hovers in these lower levels and doesn't provide us an exit, we're going to be writing covered calls every single week. And every single week you put premium in your pocket, guys, your average cost goes lower and lower and lower. And then eventually, when you do get that bounce, you get to collect all of the profit that you accumulated in this area. So is it bad that we got assigned? Not really. This is still a very juicy trade for me. Now, I'll be front and center and say, am I bullish on Intel as a company as a whole? It's debatable, right? I like the company. They're on a good recovery story. They have a long road to do, but do I put them on the same level as Nvidia or even AMD? Not really. The one thing that Intel has going for it is a case of rising tides lift all ships. If ever, the rest of the semiconductor industry continues to outperform. And keep in mind, guys, semiconductors have been roughly flat for the most part, guys, for a majority of this past, month and a quarter of trading at this point. You've only had a few stocks that provided tremendous discounts. Intel and AMD are two of them, but for the most part, your large semiconductor plays have been flat, right? Nvidia roughly flat, ASML as well, one of your leaders, roughly flat. AVGO, take a look at those guys, they're roughly flat. Applied Materials as well, great company, they're roughly flat as well. So a lot of your large players, guys, are still flat. And this earnings week, we have our first semiconductor plays that are going to be reporting. ASML and TSMC, most likely they're going to beat, most likely they're going to guide for further revenue, further increase in EPS, and continued demand for semiconductors for AI platforms and data center platforms as well. And that will cause some bullish momentum for semiconductors as a whole. And I don't believe AMD and Intel will be left behind. So hopefully that was educational in how we can manage the Intel assigned position if ever you're in this trade with me. Now, the next trade, guys, we were looking at was Palantir. So Palantir, we were always looking for the same thing. So we were always looking between $21.50 and $20. Well, Palantir last week, what happened on the Monday and the Tuesday? We dipped as low as about $22.54. Guys, I'll be front and center in saying it really didn't open much premium down here. The 2150s were temporarily available, but I wanted a bit lower than that. I really wanted the 21s. So I can't blame you if you did take the 2150 trade. It is still within our big area of support. You could have gotten a decent trade there. But for everybody who was looking for the $21 strike or better, as I was discussing last week, unfortunately, it was a no trade for us. So congratulations to anybody who did take the 2150s. That was a good trade, and obviously not getting assigned. But anybody who was trying to get for lower strikes, we just did not get the trade opportunity. The thought was good, but the market just didn't move down enough in our direction quickly enough. And on the Wednesday trade, when it was down here, guys, there's just so few days left in the week that it's just not worth it to be writing at the $21 strike here for the 2 days that were remaining. Now, the next play we were looking at is another one that I personally got assigned in. So Shopify, we were in this gorgeous area for a breakout retest, right? So break out of this range, retest, trying to set the monthly higher lows for the eventual trend continuation higher. So now Shopify is clearly coming down into our big area of support. This is where we should be looking to buy. But I know when a lot of people see red candles in a row, they think that the market's falling apart and Shopify as a company is done. Have the fundamentals of the business changed over the last couple of weeks, or is this just due to overall market consolidation? Quick hint, the fundamentals of the company have not changed. It's still an amazing company. I still love their earnings, all of these positive catalysts, and their valuation is really not too bad at the $70 mark. That being said, if we did choose the strikes that we were looking for last week, we were looking for $72, $71, or even $70. You can see here on the Monday and Tuesday session prior to CPI and the rest of the damage that was done due to geopolitical events the rest of the week. Prior to CPI, Monday and the Tuesday, Shopify only got as low as about $73.54. So the only strikes that really became available to us, guys, at that point were the $72 and $71 at that point. Wednesday had not yet happened yet, right? So I personally went for the $72 strike. You can see that right here, right? We got the $72 strike on Shopify. We got about 46 cents for them, which is above our 0.5% rule. 0.5% would have been 36 cents. So very happy about that. Now we have to do the same thing with Shopify for anybody that's been assigned. We have to take a look at the covered calls for our position, right? So let's take a look at Shopify, what we can get for the 71s and 72s, since we most likely have been assigned. Now, as you can see, guys, the $71 calls are currently paying $1.18. This is like 1.5%, guys. If you don't know how to do the math, it's very, very easy. Just divide your bid. So let's take the midpoint, $1.20, let's say, and you divide that by $71 strike. It provides you 1.7% for a week worth of trading. So most likely you got assigned and you collected some premium. Let's say you got 40 cents, 50 cents. Your break even now becomes 50 cents lower than your assigned price. Now you're going to be able to write juicy covered calls, whether you were assigned at 72 or 71. And if Shopify has a bounce with the markets tomorrow, let's say, because the geopolitical concerns are kind of alleviated, if Shopify gets a juicy little bounce here into the 71, $72 range, I'm telling you, these covered calls are going to be extremely, extremely juicy. So don't hesitate to pull the trigger on these. The premium is fantastic. 72 still paying well above 1% and 71s still paying well above 1% as well. So looking forward to writing covered calls on Shopify, further reducing my average cost and continuously playing this stock as we retain within this wide area of support. The fundamentals of the business have not changed. We're just going through a little bit of a lull period in the markets right now. So this is a great opportunity if it's a high conviction trade for you, of course. Now, Lastly, we were looking at Expedia. So Expedia was also a fairly juicy opportunity in terms of the trade idea, but the price action just didn't go enough in our direction. So Expedia, we were really looking for 128 and below. Unfortunately, it did not happen. You can see here on the Monday and Tuesday session, Expedia actually went up in price, which really crushed all premium down here, 128 and below. There was really no opportunities to trade Expedia in these lower levels over the course of the week, except of course, until the Friday session when it really came down into the lower 130s, right? So the trade idea was good. We were once again going for the monthly breakout. Retest of this big previous area of resistance should now be acting as support. The monthly moving averages are there as well. So I was saying 128 down to about 125, such a juicy area, and it remains a juicy area if ever Expedia comes down into here and you have a high conviction status on the company as a whole. This is a very juicy area. Unfortunately for us, last week it just didn't come fast enough down into this area to open up that trade. So the idea was good. It's just there was no trade for us. So that's pretty much a recap of last week's options plays. There was also a few bonus trades that I gave you guys as well. You can see that I took a few of them. You know, I went with the BABA trade right here. I went with the 71 puts. That played out very nicely for me as well. And there were a few other trades that I took later on in the week as well. But that is not the focus of the video. Let's just focus on the top 5 options trades coming up for this week. So few names will be coming back, guys, as usual, right? If stocks still remain in our areas, there's no need for us to look for other pairs, guys. Just continue trading these stocks right here if they remain in our desired levels and if they are high conviction trades for you. That is the most important thing that you'll hear me repeat over the next coming weeks, guys. It's all about high conviction. Why is high conviction so important, guys? Because if you get assigned, you won't get shaken out of a position. You will understand why you're buying a stock at the desired strike price in a company that you love. If you get caught in a company that you don't have high conviction in, you're going to be constantly questioning, especially if you're in the red, you're going to be constantly questioning yourself. Is the stock even going to come back? What happens if it doesn't come back? And then you're just, it's going to cause a little bit of emotion, a bit of a heightened emotion state for you. And managing the position, guys, when you're in a state of heightened emotions is never a pleasurable experience. So please keep that in mind, guys. High conviction trades only. All right. So this week, again, we're going to be looking for Apple. So let's take a look at Apple's expected move for the week. The expected move on Apple to the downside is about 172.01. So we want to be targeting strike prices around or below 172.01. Now, Apple, I know for a fact, trades in $2.50 increments. So unfortunately, there is no 171 strike. It's either 172.50, 170, or 167.5. So let's take a look at some of the premium here, guys, on Apple as a whole. And you'll see that the premium for the 172.5s is fairly good, but it's above our area of the expected move. Now, 172.5, if you're a fairly aggressive bull and you like Apple down in these lower areas, I don't see any reason that this is a bad trade here, guys. However, if for some which reason the market pulls back tomorrow, Apple's been on a very nice rally the last 2 days. If they have a little bit of consolidation, bringing them down into the 175s tomorrow, you may just get an opportunity, guys, to be getting the 170s. The 170s are not there yet. For this trade to be live, we have to see 85 cents on the 170 bid right here. As of now, it's only on the 172.50s. So Apple right now, the 172.50s does represent a good trade opportunity. But if you're a more conservative bull and you want to maybe wait for us to potentially lose some steam on Apple here, we're trying to set the daily higher low for further trend continuation. So if you're waiting for this daily higher low and Apple is green tomorrow, you can probably maybe even give it till Tuesday. Now, can Monday and Tuesday just continue doing this? Yes, but if you want to be cautious, if you're an aggressive bull, by all means, the 172.50s, if I didn't already have 200 shares of Apple, guys, I'd probably be going with the 172.50s myself. Right? The difference between 172.50 and 170 is not that, it's kind of negligible in my opinion, guys. It's still an awesome level for Apple as a whole. But if you're a more conservative trader, right? Maybe you don't have that much capital and you really want to get a juicy entry on Apple, you may want to wait for a Monday or a Tuesday dip to open the 170 strike for you. Of Quick reminder, just look for 80, 85 cents on the bid. And even if you get a little bit lower than that, guys, let's say you can only find 65, 70 cents on the bid, you can take that trade too. It's not that bad of a trade. Even if you're under your desired ROI, at least you're being more cautious than you are aggressive, and that's always a good thing, right? So now the next trade we're going to be looking for, guys, is once again, sorry, it's not going to be this one. It's actually going to be AbbVie. So AbbVie, one of my favorite healthcare names in the entire market. They are one of your largest contributors to the healthcare sector as a whole. This company is pretty cheap right now, trading at about 14 PE. And look at this chart, guys. AbbVie is such a solid company. You may not know a lot about it because it doesn't get talked about that long, but trust me when I say it is one of my favorite plays in healthcare for a reason, guys, and is one of Wall Street's favorite trades as well. So a lot of things are helping out, guys. We're in a beautiful monthly uptrend right here. We're just looking for the monthly high or low. This trade looks, it's the classic breakout retest. Breakout of the top end of range of consolidation. Now we're retesting it to the lower end, right? Coming into our previous resistance areas. Should now be acting as support. 12 EMA on the monthly as well. Juicy trade. Couple that with oversold daily conditions, and you get the recipe for a very nice entry down here. So the expected move for AbbVie on the week is 158.40, right? High conviction trade for me, to say the least. Now let's take a look at some of the premiums we can get on AbbVie. Lower than our expected move of 158.40, right? So 158.40 strike, or 158.40 and below, you can see this is kind of the same thing as Apple, only trades in $2.50 increments. So as of currently, we have the 157.50s for 70 cents. That's not too bad. Now I know 0.5% of this would be closer to 80 cents, but even if this trade is between 70 and 75 cents, since we don't have the benefit of having $1 strike increments, I would not mind playing this even if it is 70, 75 cents on the bid here, guys. So if AbbVie continues in a slight decline tomorrow, lower 162s, 161s at the open, it may give us the premium that we desire at the 157.50s, and maybe even better, guys, we may be able to get the 155s. Now, if AbbVie continues with a heavy red day tomorrow, let's say it goes down another 2% off the open, something like that, this is one of the rare scenarios where I may just be willing to go 2 weeks out instead of one and try and bring some of the premium forward, all right? So at that point, I may be looking for the 155s. The 155s for 2 weeks out are providing over 1%, right? 1% would be $1.55. These are trading about $1.80. And what happens when we go 2 weeks out and the stock has a juicy bounce, let's say on Tuesday or Wednesday? The premium comes out of these contracts a lot faster than it does even for the weekly sometimes when you're far off the price of the stock. So that is a great way to pull some premium forward. So I'm going to be looking for either the 157.50s for this week or maybe even the 155s for 2 weeks out, guys, because it's below our expected move, coming into a juicy area of support, and I do think we get a bounce from the bulls in this area. So all in all, looking very good for AbbVie, one of my high conviction trades for the week. Third trade is going to be once again looking at AMD. So AMD, guys, the expected move for AMD, guys, is down below here in the 152 range. Now you may say, but Will, that is below our current area of support. And you would be correct. We are still looking for the bulls to protect this 164 down to 158. And they do still have a lot of support down there. Now, where is the lower area of support? Because that is important too. So the lower area of support, guys, really starts at about 147, 145. So the expected move for the week, the reason that I like this, guys, is because we still haven't smashed through this area. So we still have a lot of support. The expected move is now below this, right? What are we looking for on AMD? We're looking for the monthly breakout retest, right? Just looking for the monthly high or low for the eventual trend continuation. AMD with earnings pretty much in the next 2 weeks. So I do believe that price action until that point is going to be fairly muted. I don't think AMD before its earnings is going to drop off a cliff like this. Let's just be honest, okay? So AMD, I'm going to be looking as low as possible. Since the volatility on AMD has been high recently, we want to try to get as low as possible here, guys. Let's try to see if there's something available right now on even the 150s. AMD, high conviction stock for me. That's why even it's below, if it's kind of in an in-between, right? This whole 150 area, it's below our main area of support that we're dealing with right now, and it's just above our next area of support, which is, you know, kind of the 145, 140 zone. So that being said, let's see how low we can get on AMD to benefit from this volatility. Well, look here, guys. We actually have the 150 strike potentially being available soon. So the 155s are currently available for $1.22. However, that is above our expected move of 152.21. We want to be getting below that. Well, you can see here 150 is paying about 54 cents. We should be seeing about 75 cents. So it's not there yet. So if AMD comes down into this lower range of support, let's say they dip to 162, 161, 160, that will probably open up for the week these 150 puts. Now, another way we can do this is potentially go 1 week further out. As you can see here, guys, the 150s for 2 weeks out, and this is one of the only times that I'll consider going 2 weeks out on the strikes, guys, is when we're currently in an environment where we have some short-term fear catalysts, but we know we're in a trade that is an advantaged trade in terms of being one of the best themes to trade this year. Occasionally, when we have a lot of fear in the markets, the VIX comes up, the options premiums comes up. Sometimes I go 1 week further out to get a lower strike price, right? So that is what I'm going to try to be doing with AMD. I'll pull up the options chain here so we can get a full breakdown on AMD, because we may even be able, if AMD really has a heck of a sell-off here, Monday or Tuesday down into the lower 160s, right? Lower end of this range. We may be even able to go shopping for 2 weeks out and get even better. So let's go to the 2 weeks out. I just expanded the chain here, guys. My apologies. This website is fairly slow. I have the fastest internet you can possibly imagine, but this website is always slow for me, the NASDAQ.com specifically. So let's wait for these 2 week strikes to load, and here they are. So you can see here, guys, right? Right now we're going to be looking for, if we're going 2 weeks out, right? 0.5% per week minimum means for 2 weeks, you want to be looking for 1%, right? And as you can see, the 150s are freed up. But, the 145s are only paying 0.71. I would keep a close eye, guys. If AMD, for some which reason, has a bad Monday and Tuesday, bringing us down into the lower 157s, maybe even the 145s 2 weeks out could be a potential trade. So keep an eye on these guys. 145s, 150s for 2 weeks out if the premium is still good, or even 1 week out, right? We're going to be eyeing those 150 strikes, looking like a fairly juicy trade on AMD. High conviction trade for me on the week. And obviously the one that I've been preaching the last couple of weeks, Intel still stands as well. Intel, we're going to be trying. The reason I'm not bringing it up this week, guys, is for anybody that didn't choose to play it last week, well, I'm including only my highest conviction trades over the course of this week, right? Even if we've been playing Intel for a while, I want to be focusing more on the highest conviction ones. That being said, for this week as well, if you didn't play Intel, I see no problem in trying to play the $34 strike. Same rules apply. Just check what is the expected move on Intel for the week. I didn't do it yet, but I just want to give this as purpose of example, right? So let's take a look at Intel. 34.44 to the downside is our expected move, right? So we want to be getting below 34. So think 34 round dollar strike. And if we take a look at the options chain for Intel right here, if you like this company in this levels, well, I will be looking at potentially, well, I already have my shares, so I'm good, right? I won't be averaging down until about 30 if it ever gets there. But $34, you can see it's not really paying too much, so you would still need Intel to come down a little bit. That's why I haven't really included it in the trades for the week, all right? So next play is going to be Autodesk. Autodesk, well, Autodesk is the face on the channel for the breakout retest trade, right? So we'll be ashamed to play it when it's not giving us the breakout retest on the monthly. It gave it to us back here on the weekly when we cracked the weekly trend to the upside and broke this level. It gave us the re-entry right here for continuation. Well, now it's doing it on the monthly, and no fundamentals have changed at all, guys. Autodesk has just been caught as a byproduct of the markets coming down overall. Now we're approaching a juicy level. This area right here, the top end of this range, you can see your monthly moving averages are there as well. 231 is that level. The expected move for the week on Autodesk is 227.82. So that's going to be, we're going to try to going for strikes 228 or better on Autodesk. So let's just go see right here on Autodesk what the premiums for the week are. And you'll see, as a matter of fact, I ran them before. They are fairly good. So take a look here, guys. 227.50s. We would need to be seeing at least, let's say, $1.14 on this strike for it to be worth this for us. 227.50s already paying $1.70. Very juicy premium. We can even get lower than that. We can even go for the 225s paying $1.30. This is still within our 0.5% rule. So if Autodesk drops even again tomorrow morning, let's say, Autodesk comes down here, 235, 234, guys, I will be looking as low as possible. If the 222.50s are offering me $1.10, I'm going to be going for those. So the ones I'm more keen on going for this week on Autodesk, 225, to 22.50. Very juicy area, well below our expected move, and that would give us a heck of a cushion from current price here, guys. We're talking a cushion of roughly, anywhere between 5 and roughly 6% to the downside, and that will really bring us in the top end of this range right here. The bulls are going to start putting up a fight in those ranges. That's why I like Autodesk. This is one of my favorite trades for the upcoming week. Couple that with we're almost getting into oversold conditions. Very, very juicy opportunity to swing trade this, in my opinion. And the last trade of the week here, guys, is going to be Palantir. So Palantir, another one of my high conviction trades, but we need to see the levels for Palantir over the course of this week here, guys. We need to see the 21.50 down to about $19, as low as possible as we can get on Palantir within those lower levels specifically, right? So Palantir looking very good. Essentially what we're looking for on Palantir is just this monthly higher low formation coming into this big previous area of resistance, now support, and it was support for us on the past. This is the monthly time frame. So your long-term bulls are going to be sitting here trying to smash the bid if ever it does come down into this level. So let's take a look, guys. Can we get $21.50 down to $20 on Palantir for the course of this week? Let's pull it up right now. So Palantir for the upcoming week, let's take a look at the premiums here, guys. Well, you can see that the 21.50s do offer 0.5%. We would need to see at least 11, 12 cents on the bid. So far, it's offering 16. If Palantir, for some which reason, tomorrow or Tuesday morning starts off red and heads down into the lower $22 range, high 21s, that will free up probably even the $21 strike. If volatility is high, maybe even the 20.5. So we want to go as low as possible in these strikes while still getting our 0.5% rule. So that is going to be a trade that I'm looking for on Palantir. It's the same trade I've been making on Palantir for literally the past 3-4 weeks in a row. Every time I can get the 21.50s or the $21 strikes, I just go for those. So looking very good on Palantir. As a whole, those are pretty much the top 5 plays that I am looking for on the week. The bonus plays, I'm not going to give them, guys, because I don't want to give anybody any ideas, right, in terms of swing trading this week, right? So I'll be looking for a few of them in terms of other ones, such as Alibaba and stuff like that. But as a whole, in times of heightened uncertainty, times of heightened fear, and in times where we're in jeopardy of kind of losing weekly levels, right, I want to stick to the most high conviction trades. And for bonus trade ideas, right, the challenge for you guys is going to be going through the stocks that you like and trying to determine whether or not there are some high conviction trades that you like that are coming into areas of big support that you feel comfortable playing. So keep all of that in mind, guys. I'm pretty sure it's going to be a very nice week. We have futures that are green right now, potentially some fear alleviated. So tomorrow we may be getting a little bit of a bounce. So it'll be crucial for us to be at our screens tomorrow between 9:30 and 10 and try and get some of the juicy positions that I've talked about on the video. So with all that being out of the way, guys, I hope you guys enjoyed the video. Hope it was educational. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. And also consider subscribing to the channel if you're new. Thank you once again for the 1,000 subscribers, guys. I really appreciate it. And don't worry, I'm not going away anytime soon. We're going to keep doing this content for many, many years to come. Look forward to growing the channel with all of you watching as well. And as usual, guys, if you have any questions at all on the strategy, or if you want to run a specific play by me, if you want to say, hey, I'm looking at this stock. Is this level good? Is this the type of stock that you look for at the type of level you look for? Feel free, guys. Leave it down below in the comment and I'll answer you within the first 24 hours. So take care, guys. I'll see you tomorrow for our Monday market recap after the close. Take care. Happy trading and peace.